Hi, everyone. Welcome to this event on the state of the telecom industry in Canada, how we got here and where we're going in trying times. This critical sector that handles important infrastructure for the future of the economy, that is a big part of virtually everyone's retirement portfolio, if you have one, and that everyone interacts with in one way or another. Certainly, if you are watching me, you are dealing with the telecom company on some level. I'm speaking to you right now over a Bell internet connection. So we're going to talk today about these key issues, and this is a common thing for the Logic. If you're new to us, welcome. We're glad you're here. This is an open event, so subscribers are here, but also people who have maybe not encountered the Logic before. We do this kind of event and we do this kind of coverage all the time. We have a kick-ass team of reporters all across the country. I have 3 reporters in Ottawa, and what we are doing is trying to tell you where this country is going and where this economy is going. And at no time has it been more important, I think, in my lifetime than right now. This event is sponsored by TELUS, and to kick us off, I'm going to invite Stephen Schmidt, who is Vice President of Telecom Policy and the Chief Regulatory Legal Counsel at TELUS, for some remarks. Stephen?
Hi, thank you, David. Welcome to all, and thanks for being here. A big thank you to our panelists, Robin, Ian, Maher, for agreeing to be with us today and for sharing your wisdom, your expertise, and your perspectives. And a big thanks to David and the team at the Logic for organizing this event. As David reflected, we're at a decisive moment in the world and a decisive moment in the history of our country as we face expanding geopolitical risks, acute economic uncertainty, and escalating climate change. We're at a decisive moment in telecommunications as well, because these networks operate at the intersection of often conflicting forces and imperatives: technology, politics, regulation, consumers, and business. Telecommunications networks are inseparable from the broader environment around them. In the digital society and economy, policies for networks are social and economic policy. Given this, thoughtful and effective policies for networks hold the key to confronting and solving many of the pressing challenges of our times. Recent studies indicate that a more pervasive adoption of broadband could reduce CO2 emissions in Canada by up to 20%. Broadband adoption has contributed almost 20% of Canada's labor productivity in the 10-year period ending 2019. That's very, very significant. And as we head into a potential and imminent federal election, the stability, predictability, and performance of our network quality, our network policies need to be front and center, given what is at stake and given what is riding on these networks. Hence today's panel. Robin, Ian, and Maher will explore key issues facing the sector. They will tackle essential questions before the CRTC, indeed as the CRTC undertakes an ambitious review of a very, very wide range of policies and as we anticipate changes in government. Important questions or issues include: how can government ensure stability and resilience in the sector in the face of extreme economic uncertainty and geopolitical turbulence? As we enter into a potential federal election, what can the sector do to get ready and to adapt proactively in the face of potential changes? And with the CRTC undertaking a review of a very wide range of policies, what's likely to happen and how can we prepare for these impacts? Our conversation today will emphasize the importance of a measured and predictable approach in uncertain times, suggesting that the best path forward may be prudence as opposed to sharp changes or quick divergences from established frameworks. And over the medium term, it will be important to establish those areas where Canada most acutely and sharply diverges from international best practice, for example, in the dual oversight of wireless, current approaches to auction design, the political control of an independent regulator, and to assess the costs to Canada holistically of these policies in terms of foregone opportunity, investment, and productivity. As the telecom sector goes, so goes the nation in a digital world. Over to you, David.
Thank you so much for that, and thank you for sponsoring this panel. Something clear to the audience, though, because you're probably wondering if you're interested enough to be taking part in this. TELUS, like all of our sponsors, gets no say in really what we talk about, who's allowed to be on the panel, what questions I ask, what they can't put anything off limits. They understand that this is really journalism and it's about the audience and serving you. And if a sponsor tried to tell us what we could talk about or who we were allowed to talk to, it would be a very short conversation. I think it's important to make that clear. So without further ado, I'm going to bring on our all-star panelists. With us, we have Ian Scott. There is hardly a job in telecom that he has not done, but he is probably best known as former chair of the CRTC, the telecom industry's major regulator. We have Robin Shaban, who is an economist, who's worked for multiple clients, formerly of the Competition Bureau once upon a time, but is here in their capacity primarily as co-founder and chair of the Canadian Anti-Monopoly Project. And we have Mayor Yagi, who is a managing director and an analyst in the telecom and cable sectors for Scotiabank. And on analyst calls is often asking some of the questions that I find most interesting. So panelists, welcome.
Good afternoon.
Thank you all
Thanks
for
for
being
having
here.
me.
Before we get into it, I want to emphasize to the audience, folks, this is really about you and addressing the things that you want to hear about. So there's a mechanism for you to put questions in the chat, and as best we can, we will thread those through. And it has happened more than once that the questions have taken the discussion in places that are totally unexpected. And I don't get to ask some of the questions I wanted to ask because you folks have better ones. So please don't be shy. Start now if there are things you want to know. So let's get going. Telecoms are not some of the most popular companies in the country, I don't think. I certainly don't feel that way whenever I open my phone bill. Why do people love to hate them? This is a question I want to put to you, Ian. You've dealt with public commentary on telcos in your professional capacity. How do people feel about telecoms in this country?
I suppose one way to look at it, it's like saying, how do you feel about government, or how do you feel about other major utilities? It's rare that people speak highly about, gas prices, about their hydro bill. When you have evolved perhaps from a monopoly environment to a more competitive environment, and you still feel you don't have a lot of choice, there's a tendency to just sort of hate the big guys or gals. And I think that's a major factor. The other one, frankly, is media, and the way the information that is presented. I don't think consumers are getting as much unbiased information as they ought to. And it might change their perception if they had a little more, a better understanding. They should listen to shareholder calls and questions that Mara gives or others.
So, Mayor, give us the lie of the land. I think there's been a sense that telecoms have been having a really great few years as people have moved, so much has moved online in the last 5 years, thanks to the pandemic. They were doing great business. How are things going for, let's say the big three in particular? How are things going for them right now?
Yeah, telcos are very profitable. We don't want to dismiss that. But if you look at prices in Canada and you compare them to the rest of the world, 15 years ago, 10 years ago, you would have rightly so came to the conclusion that prices in Canada are too high compared to other OECD countries. But since 2008, we started seeing a lot of pressure on prices in wireless, but they really got accentuated with the entry of Quebecor into the rest of Canada when Rogers bought Shaw. And if you look today, again, as Ian was saying, away from the bias, the historical bias, you look at prices in Canada in wireless, they're lower than in the US, even though population density in Canada is way less than in the US market. So that perception that Canadians are paying too high of a price for telecommunication services is very historical in nature and not true as it is currently. I'll stop there, and I think that's important to highlight.
You say that they're making good money, but how have they been performing in the markets lately?
Yes, they are profitable, but 2024 was a horrendous year for telecommunication stocks. If you look at performance of stocks in telecommunication in Canada, it was the worst performance relative to other companies in the TSX since 1959. It's been the other year that was kind of close in terms of negative performance as it was in 2024 was in 1980, when inflation was rampant and interest rates were going through the roof. I mean, 2024 really was a horrendous year, and it's a reflection actually of how pricing in Canada has deteriorated over the last 2 years.
So, Robin, seems like there's an opportunity here for small competitors to get in on it. Is there space for small competitors in the Canadian telecom sector?
I think certainly, and I think that this is a central theme of recent consultations by the CRTC around access to wholesale, or rather wholesale access to internet infrastructure in order to expand that retail market. But I do want to follow up on the comments that have been made here to say that, despite the fact that we don't have a full-blown monopoly in telecom, the fact of the matter is that our market is an oligopolistic market when you look across provinces. And that's evidenced by the fact that telecoms do well, right? Telecoms have high profitability because of market power. And we can debate whether it's acceptable for private business or business in general to have that market power and have the ability to wield that market power to extract higher prices. But I think that we need to understand trends in telecom pricing within the context of the fact that we do exist in this oligopolistic market, and that has negative implications for consumers and also innovation in the space.
Okay, let's dig into that a little bit, because the big three have all reported results within the past month or so, and they're all talking, to my eye, about how hyper competitive the market is. They actually seem a little bit aggrieved about it. So, Robin, how can something be hyper competitive and oligopolistic at the same time?
I don't dispute the fact that the three major telcos are competing vigorously with each other to capture market share. But it is also a reality that because we have this oligopolistic market structure, these firms are charging higher prices than they otherwise would if there were a larger number of competitors. And this is something that the Competition Bureau itself found when it evaluated Bell's acquisition of MTS back in 2016. In provinces where there are more competitors, you have lower prices. And we talked about the important role of Videotron in pushing prices down. But there's still many regions in Canada where there are an insufficient number of competitors. And again, that has negative impacts primarily on households.
So, Ian, you regulated the sector for a long time. What's your take on that? Is there enough competition in much of the country, and you can define enough however you want.
Fair enough. And I agree in large part with Robin. I would, a couple of caveats. The commission has in the past ruled that the big three, and in fact, in a couple of cases, um, even have singular market power, but in most cases have joint market power in the wireless sector. Commission hasn't made that determination with respect to broadband. That's sort of neither here nor there. But she's right. Look, the more competition you have, I mean, the better it is for consumers. I would disagree however, about Canada in some way being unique with respect to an oligopolistic market structure. There aren't very many places in the world that have a large number of entrants in this nature, in this kind of industry. It's capital intensive. Obviously, there are barriers to entry. There's a need for scale. And we often talk about, well, we'll throw open the borders and everything will be just fine. No one's coming in and building a fourth national wireless network or broadband network. If anything, they'd be looking at companies in the marketplace to try and purchase something, within Canada that already has brand awareness and the necessary scope and scale. So that's my sort of first take. But she's absolutely right about overall competitiveness. I'm sorry, I'm running on a little bit, but I've always said, look, we're an unusual country in that we have, in effect, three sources of coverage. We had universal telephone coverage, we had basically universal cable coverage, and we have universal wireless coverage. And there aren't very many countries that have that level of deployed networks. And yet, we have in the past not had sufficient price competition. So that's been the issue for the regulator. How do we intensify it? And as Robin said, we've introduced wholesale regimes. And in fact, the commission introduced a major change to the wireless framework, 4 years ago now. And frankly, it's working, and we need to give it time to continue to work.
I want to pick up on something that Robin said a minute ago, and I'm going to put a question to you, Mayor, about the effects of this. The CRTC has made a decision about wholesale access to fiber to the home and who gets it. And actually, what I'm going to do is, Ian, I'm going to ask you to explain it briefly, and then I'll go to Mayor about the consequences. And this is a decision that I think has TELUS pretty happy, and virtually everybody else in the sector, from Bell to tech savvy and small operators, like dipping their torches in pitch and sharpening the tines on their pitchforks. So, Ian, can you lay out what the decision is and what it meant?
Well, look, quickly by way of background. So the commission had introduced, in my predecessor's term, a framework to allow for wholesale entry. And be candid, it didn't work that well. The rates were not commensurate, or didn't encourage entry as expected. And the commission has retooled that. Basically, the system is this. In the past, a wholesale competitor would purchase access facilities, the use of facilities from the incumbent, from the dominant carrier, at rates determined by the CRTC, and then resell it to the public. And the service that they were able to get did not include fiber to the home. And that was a big distinguishing feature of the commission's most recent decision. They have now said that when it is offered, it has to be right to the end user, and it has to include fiber to the home. And that has obviously precipitated a significant reaction from the carriers, who are worried about recovering their significant capital investments, but is potentially very positive for competitive entrants, depending on the rates. And I'm going to say one quick thing, because I want to make sure that everyone understands that I am in no way currently speaking for the commission.
Right.
You are hearing my personal views and comments. I
Yeah,
am not playing armchair quarterback here. I don't know. Was that a helpful explanation?
Yeah, I just want to throw in that I think one of the significant aspects of it is they're sort of counting TELUS as a smaller competitor that should have access to.
Oh, well, that
Bell's and
specific
Rogers'
issue,
network.
sure. That specific issue is that the commission basically said that within your own incumbent territory, you can't resell to yourself, and that was to stop. I assume I am now expressing an opinion or an interpretation
Mhm.
of a commission decision, that was to make sure they didn't use fighting brands or friendly companies to within their territory. But what they did say was, oh, we'll encourage them to use it to anyone to enter outside of their territory, which, put simply means more competitors. And
So
TELUS is
sorry,
taking advantage of that.
I want to ask Mayor, what's the effect of this on the possibility of companies moving into other companies' territory? What's the effect on the market?
Yeah, so I think rightly so, the CRTC is looking for ways to increase competition in wireline. They have done a significant job in wireless. As I mentioned, prices in wireless now in Canada are way lower than they were a couple of years ago. I think everybody here on the panel and listening can see it in their monthly wireless bill. That hasn't happened as much in wireline. So they're trying different sorts of ways to improve competition by allowing TELUS and it's not just TELUS. I mean, Bell is going to theoretically be allowed to compete in the West. TELUS can compete in the East, which, historically was not the case. And the CRTC thinks that this is a way to bring in a well-capitalized company to compete against other well-capitalized companies and bring down prices. The problem in the past is that you had small ISPs trying to go up against Bell and TELUS, and they had a hard time making inroads in that kind of very competitive landscape. So this is a new way that the CRTC is thinking that can affect prices negatively. We are, at the end of the day, what we said in our reports is that it will all come down to the tariff that the CRTC will land on, that the companies will be allowed to charge competitors to rent their fiber at $68.
Sorry, I just want to say, when you say tariff here, because
rate.
we've been hearing a lot about tariffs.
Yeah, it's
Basically
kind of the wholesale
price,
rate.
right?
It's the wholesale
Right.
that TELUS pays, for example, Bell to rent their network. The current $68 is low, but not too low to squeeze out all the other competitors in the marketplace. So it's going to be very hard to really come in the middle of the pendulum, because it can swing very, very widely. But we think that the current system is going to increase competition.
Yeah, there's a rub though. There's an important nuance here, and that lies in whether we're evaluating competition in the short run or the long run. And I'm following our chat conversation here, and I see Jeff White chiming in. So I'm with the Canadian Anti-Monopoly Project. I'm also on the board of the Public Interest Advocacy Center. And both of these organizations participated in the consultation around this issue. And one of the key problems that were raised by these organizations and others was that, okay, sure, let's let TELUS enter Ontario and Quebec by accessing Bell network on a wholesale basis. And there's no disputing, I think, that in the short term, this will lead to lower prices, right? You have a big telco entering the space. They have a lot of resources from a marketing standpoint and other marketing infrastructure or service delivery infrastructure. They can enter very quickly and drive down prices. but you're not fundamentally changing the structure of that retail market. You're just adding another large firm in there, versus a more long-term perspective where we create room and space for smaller retailers to enter that market. And I mean, just to pick on some of the language we were using before, these small firms going up in a highly competitive landscape. The landscape isn't competitive, right? What would make the landscape competitive is if we had more players. What's really happening are these smaller players going up against Goliaths and getting crushed by economies of scale and the magnitude of these firms. And like, we can have a debate on that, right? Do we prefer short-term competitive gains, recognizing that in the long run, we're missing out on potential competitiveness, versus taking a longer-term view where we forego perhaps competition today by keeping TELUS out of that market. But it creates space for these smaller retailers to actually become established and create more variety. And at the end of the day, it's up to Canadians and regulators on where their preferences lie. But ultimately, there is a trade-off here that we need to recognize.
Can I jump in on one quick point?
Sure.
I don't disagree with you in your characterization of the impact, short-term impact on pricing, but that's what the wholesale regime is meant to do. And that's true for those new competitors across the board.
Mm.
In a perfect market, or if you would, they would enter. You've mandated wholesale regime. They will drive down prices, but they're not as efficient as the facilities-based players. They don't have the same, access to capital and cost of capital, and so they will ultimately fail, which is a market working. But governments don't like to see companies fail. So I agree with you, but I don't think those companies necessarily will be around in the longer run. And their job is to, like any competitor, is to compete, have prices go down. And you're right. If you're going to say, I'm anticipating, but if there are no barriers to entry, they'll come back in. Yes. And that'll drive prices down again.
Ian, can I just jump in on this, because I'm an
And then
indifferent.
Robin. Yeah.
I am indifferent. I mean, as a financial analyst, I'm just looking at the market and kind of trying to figure out the consequences of regulatory policy. I have no preference to say I want TELUS to compete or not. Okay, so I just want to make sure that.
Nor I.
No, so I think what the CRTC came to the conclusion is that, we've seen the wholesale market in broadband for the last 15 years not really lead to any significant increase in the market share of the small ISPs. So that's one conclusion that they came to. And on the second side, they saw what if you bring in a very well-capitalized company like Quebecor into the wireless market, can bring down prices significantly. So they're probably thinking, what if we allow a TELUS, for example, or Bell to come and compete in one of these provinces where in the past they were not able to compete? Can that make a change to the environment? And again, I have no preference if this is the right policy or not, but I think this is how they're thinking. If I'm put in their shoes. And so, and I can go back to the first, when we're talking about the oligopoly in the market in Canada, we want companies to invest in network deployment, right? We want networks to be strong, to be forward-looking, investing in future technologies. If we do what we're doing, what we want in wholesale, in wireline, to do the same thing in wireless, it will be very hard for the wireless operators to invest in 6G, in 7G, in 8G. They have to make a profit. And so, again, we can't just pick and choose what we want. And at the end of the day, nobody's going to invest in the network anymore if profits are too low.
But conversely, we're not going to have opportunities for new entrants like ISPs, smaller ISPs, to enter the market and gain a potential foothold that enables them to build out infrastructure if we're not conscientious about how we're shaping these markets through regulatory decisions, right? And again, I come back to this short-term versus long-term trade-off, right? Yeah, we may have TELUS entering in central Canada and Bell entering in Western Canada. Yes, this may drive down prices. Yes, they're well capitalized. But if that comes at the cost of pushing out smaller ISPs that could otherwise compete, earn profit, and use that foothold to build out infrastructure themselves, then we're just shooting ourselves in the foot. And I mean, again, we can have a conversation about whether that's likely or possible, but and I'd be interested in learning more about that, right? Like whether we think it is even feasible for an ISP to enter that space, because based on what I'm hearing here, it seems like there's some skepticism about that.
We've been talking about innovation, or we're talking about competition in terms of price largely, and price to households, price to final consumers. We have a question in the chat from Jason asking about innovation, and so competition on quality, competition on higher speeds, competition on companies offering cool new services that you didn't know you needed until they offered them to you. Do we have a market structure that encourages that kind of competition? Actually, I want to hear from all three of you on this, but I'll start with Ian, then Robin, then Mayor.
I don't think. Look, I think Canada has performed well. These are industries that you don't have major technological change every day. I mean, the big issue is quality of network, coverage, and price. It's sort of a three-legged stool. They do innovate. They have implemented new services, new technology as it's evolved. So I don't think that is an area where we're lagging, I should say, in Canada. I'll stop there.
Robin, do we have competition that leads to real innovation, better services, not just cheaper ones?
I mean, certainly there have been improvements to service. But I want to take this a slightly different direction to think about innovation more broadly by these companies outside of the telecom sector. What's really interesting about many of these companies is that you see them expanding and arguably innovating in marketplaces that are somewhat unrelated to telecom. These everything companies is a word that we often talk about in the competition policy space, with TELUS in agriculture, and Bell and Rogers in communications and sports. So are we really seeing these large oligopolistic firms earning juicy profits that they're then reinvesting in other basically unrelated market areas in order to create innovation or dominance in those marketplaces? So we need to be thinking about this telecom market within the broader ecosystem that these firms are looking to play in.
I think they tend to take different. Oh, sorry, I should let Mara go, but they take different strategies. Bell's obviously doing the opposite of what TELUS is doing at the moment.
Mayor, take a shot.
Yeah, so on the technology side, on the innovation side, 5G technology deployment in Canada was fastly, deployed, much faster than in the US, which was, if you look at 3G, 4G, the US was always in front of Canada in terms of technology deployment. So in terms of how much these companies are investing in bringing the newest technology to Canadians, they have picked up the pace. They have invested more than they used to be in the past, and then on that front, you want to see a decent return on investment, because next time around, when these companies, again, they get their cues from investors, because they need financing all the time from the capital markets. Bell, TELUS, every year they're in and out. Every year they're looking for refinancing their debt for $1 billion or $2 billion a year. If investors feel that they can't get a decent return on investment, they can say, no, we want to invest somewhere else. And what do you do as a country when these companies can't get cheap access to capital? That's a problem that we need to think about when we say they make too much money. And just to put things into perspective, the return on invested capital for Canadian firms is now well below that of the US. So again, I think it's historical in nature. We always think these companies are making a lot of money, but the last 5 years, they have not made a decent return, and hence the stock prices are coming down and their historical lows.
So let me ask a follow-up question on that. I mean, something that strikes me is that all of the big three are paying dividends, sometimes quite substantial ones, even as their profits in most cases have declined, and quite sharply in a couple of instances. So, I mean, I think of dividends as something you do when you're making so much money you literally don't know what to do with it all. So you send some of it to shareholders, your owners. Nothing wrong with that, but that's something that a mature, stable, comfortable company does. So if these companies are, having trouble in the marketplace, their share prices are down, they say they're in a hyper-competitive environment, why are they paying dividends?
I guess this is a question to me. Okay, so this
Yes.
is I'll answer it simply by saying, look at your own portfolio. When you look at your own portfolio, you have companies that are growth companies that you want to invest for the long term because you think they're going to double your investment over 10 years. And there are companies in your portfolio that you want that recurring dividend because you want that money coming in that you can spend, right? Like as a pensioner or as a pension fund. Telcos in Canada are growing between 0 and 3%. These are not high growth companies, okay? So how do they attract investors into their stock? Is to pay a dividend. Because if you don't pay a dividend and you're growing at 0%, why would anybody invest in these companies? Again, I'll go back. These companies need new capital to recycle every year. If they don't, they will stop investing into future technology. So it's a constraint that they have to pay a dividend. It's not a reflection of that they make too much money, because they're not. They're making a lot less money in terms of return on invested capital than they did 10 years ago. And the dividend is to keep investors happy, actually, or invested in these companies, not because they have too much money.
Robin, I saw you making notes. You have something you want to respond to?
Yeah, I mean, especially this Canada-US comparison. And the theme that comes up for me is ultimately, like, what is driving profitability of the telecom sector in Canada? And innovation, sure, that's a part of it, right? But I think we can all agree that market power, the ability of these firms to charge the prices they do, is a driver of profitability. And we have to ask ourselves whether that is an appropriate way to make money. I don't think any market power is not inherently bad, right? Market power can be an incentive for firms to pursue new ideas and in a way drive innovation. But if we have a sector that is a cash cow, and it's a cash cow because it's captured in a lot of ways, we have to ask ourselves, who's really winning here, right? Are we taking potential income from households and just shuffling this to pension holders and other stockholders? And I recognize that we need to balance return with innovation and affordability. But I think we can also ask ourselves whether that balance in the Canadian context is right.
What do you think the answer to that question is?
I think that there is room for improvement. I think that there is room for us to be addressing market power in the telecom space without having to compromise on the need for capital or capital attraction, and by extension, innovation.
Okay.
You want to have it. You want to have the cake and eat it too, and that's but I just want to digress because again, I look at financial results and I compare, and I cover both the U.S. telecom sector and the Canadian telecom sector.
Mhm.
Historically, the Canadian telecom sector has traded at a higher multiple, a premium to the US sector because of everything we talked about here that is historical in nature. They make too much money compared to the US companies. The prices in Canada were higher than in the US. Those are all facts, true, but historical. We have to look at the reality as of, like, let's see, last year, this year, 2 years ago, the Canadian price, the stocks in Canada are trading now at a discount to US companies. Why? Because investors feel that they don't make enough profits. So they moved out, they moved to some other sectors. And so again, we go back to, do we want as an economy these companies to have enough profit to invest in future technology deployment, or do we want lower prices today and that's it? If we want both, then we need to let them make enough money so that they can invest in the future. That's for me, this is the balancing act that we have to have as a society.
Yeah, and I agree with that need for balance. I would say I'm not looking to have my cake and eat it too. What I'm looking for is just more, right? We need to think to ourselves whether it's appropriate for firms to be creating value simply off of market power, or whether they're actually using that market power to drive better outcomes for consumers. And I think that profitability should be anchored in the ability to create value for consumers and clients rather than the ability to capture markets. So I think overall, like, I don't disagree with what you're saying. My only difference here is that we should be laser focused on the ultimate aim here, which is innovation and driving value for people in Canada rather than the profitability of these firms in themselves.
I want to bring in a question from James in the chat, and it has to do with the future of this sector. When we started planning this, I think it seemed like a pretty good bet that the Conservatives were going to form the next federal government. Does not seem like as sure a bet now, but probably still the favorites by a little bit. James's question is about foreign access to the Canadian market and letting other competitors in. So Ian, I'm going to start with you. What do you think a conservative telecom policy looks like? And would that include allowing foreign access to Canadian consumers in the sphere?
I mean, obviously, it's not clear to me what the Conservatives' policies are or are going to be in this area, but they have traditionally been supportive of removing foreign ownership rules. They removed them when I worked in the satellite sector for satellite and submarine cables under Prime Minister Harper. And I've heard a fair amount of sort of sideline chatter, if you will, that's one of the focal points. And I think that's fair. The only comment I would make beyond that, though, is this isn't unique to telecom. The same is true in airlines, in financial, in banks. We have a whole set of sectors for good historical reasons. There were foreign ownership protections, but they have economic consequences in the country, as we've discussed. The trend internationally, I would say, is moving away from industry-specific controls and generalizing it to more of an approach where you say, well, we're going to look at acquisitions of key strategic assets or infrastructure. That certainly has been the trend in Europe and elsewhere. And I would think that would be a good place to go. I don't know if that's where they're heading. So then we could look at it more generically and saying, no, we're going to protect some critical, minerals, and that might demand some ownership restrictions in certain areas. But for industry specific, it would not change a lot if you opened up the country on the telecom side more than it is open today. It is open, but in a qualified sense.
So if I'm understanding you correctly, you're talking about moving to a system where it's or a set of rules where it's more like, or it's not, no foreign ownership of Canadian telecom systems, but they
That's
could
right. You
buy
could
Canadian
have
telecom companies,
you
but
could
company by company
and
assessments.
you'd transaction by transaction, almost like a merger analysis, where you'd go, would it be okay for a U.S. company to either acquire something or enter and build? Would you give them the necessary regulatory authorities? And I think the answer is yes. And then if you have to look at a specific transaction and say, no, for national security reasons or other reasons, that wouldn't be appropriate, you can deal with it at that level.
A Chinese state-owned telecom company can't come in and buy
Exactly.
Rogers, something like
Yes.
that. Okay. So, Robin, what do you think a conservative telecom policy might look like?
You know what? My answer is going to be pretty similar. Yeah, I'm not sure specifically what they have in mind as far as telecom goes. And I am skeptical of this argument that if we just blow open the doors to foreign investment, it's going to fundamentally change everything. That said, I do think capital is important, right? We spent some time talking about how we need that capital backing in order for smaller firms to go toe to toe with the larger, more dominant companies in the Canadian market. And I think that's something for conservatives to keep in mind as they're approaching this, thinking about increasing the number of providers, whether that's primarily in the retail space, but also looking at expanding the number of firms that are actually building out and owning infrastructure. We need both of those levels.
Mayor, what do you think a conservative telecom
So
policy?
in a recent report we published, we indicated that we think a potential conservative government could look to remove foreign ownership restrictions on certain review, not remove, but review, and the review will decide if there will be removal or not, but review potentially foreign ownership limits on telecommunications and broadcasting companies. Now, I just want to make sure we agree. There's nothing stopping a U.S. company from entering the Canadian market. They can certainly come in and start competing tomorrow if they wanted to, but they have not in the past done so. So removal of foreign ownership is basically just to currently the foreign ownership limits is just restricting companies from buying Bell, Telus, Rogers. Do we want these companies to be acquired by foreign entities? That's the question that Ian was talking about in terms of criticality of these networks to government operations. Do we want that's a question for the government to answer, but nothing is stopping Verizon and AT&T from buying spectrum and entering the wireless market in Canada, but they have not done so in the past. That kind of tells you an idea. I want to finish. If AT&T and Verizon don't believe they can come in and make profit in the Canadian system or compete aggressively against Bell, Telus, and Rogers, it gives you a pretty good idea that the prices in Canada are not high. Because if they were high, you could have seen these companies pop up here, but they have not.
So one last question again for each of you, and I'll go Mayor, Robin, Ian on it. We haven't talked that much about the United States, at least directly, but it is, of course, a dominant economic question. Mayor, how does the current tension between Canada and the United States affect the Canadian telecom industry?
Right now, we don't see those tariffs affecting the capex, capital investment, or the revenues or profits of Canadian telcos, which is one potential benefit. I mean, this sector could benefit if there were, investors flocking into the sector because they're fearing that other sectors could suffer.
Canada and the United States are not getting along very well, particularly economically. Mayor, what consequence does that have, do you think, for the Canadian telecom sector?
At this point in time, we think this will have very little impact on operations and investments by Canadian telcos into the sector. It can affect potentially your handset price for a new handset, but that will be an inflation price on the consumer. Canadian companies don't necessarily pay for the handsets. They just refinance it for you. But we don't see an impact.
Okay, Robin, if we're in a trade war, possibly not a literal war, but a conflict with broader implications. If we don't see the Americans as friends anymore, this is a critical infrastructure sector. What impact do you think this has on the Canadian telecom industry?
Well, I mean, Mayor, I think you have a better insight on the direct impact on telecom, but I would flip that a little bit to think about what role does telecom have to play in helping us overcome a tariff imposition. Sure. It threatens to severely undermine our economic prosperity. And to overcome that, we need to be thinking about productivity, driving new forms of productivity within the economy, and also accessing new marketplaces beyond America. And as critical infrastructure, I think telecom has a huge role to play in that, especially on the productivity front. Using and enabling new information technologies to make Canadian firms more competitive and streamlined is something that I think these firms are well positioned to do, as well as smaller providers that can enter the space with new and innovative solutions. So ask not what your country can do for you, but what you can do for your country. Come on, telecom. We could use your help.
Do we have to tariff American political quotes? Don't do
that.
Ian Scott, bring us home.
I'd agree with both of those comments. I think it's not obvious that there would be a significant impact on network investment or the industry's performance other than overall inflationary pressures. The cost of cap, some of their items may increase in cost, but it's more a question of, to Robin's point, perhaps helping protect consumers from the inflationary impact that the implementation of those tariffs might have. And absolutely, I'm with Robin. We haven't taken full advantage of the fact that we are very advanced in telecom in this country and applied it using 5G and future wireless generations for, using machine learning, using AI, applying these to increase our productivity, which is a national challenge. We have not been performing well as a country, and certainly telecom could be an important input into improving that productivity.
Folks, this has been a treat. I know we have only scratched the surface on a hugely important subject with a zillion corners to dig into. Thank you to the audience for the questions. We got to several of them. I know we didn't get to all of them. I'm sorry about that. And I'm sorry for the hiccup that we experienced. We'll have to get to the bottom of that. But this has been a discussion among all-star panelists. Ian Scott, among other things, former chair of the CRTC, Robin Shaban, among other things, co-founder, chair of the Canadian Anti-Monopoly Project, and Mayor Yagi, analyst for Scotiabank and managing director who covers the telecom and cable sector closely. Thank you, all three of you, for being part of this.
Thank you.
Thank you.
Also want to thank Stephen Schmidt and TELUS for making this discussion possible and so that we could open it to newcomers and not just Logic subscribers. But if you are one of those newcomers, you can become a Logic subscriber. Go to thelogic.co. We will set you up. I think you will find that it's worth your time and your money, especially in these fraught times. If you want to know more, there's a way to reach us there. Also, we are on all the social media networks of your choice. We're on Twitter /X. We are on Facebook. We are on Instagram. We are on LinkedIn. We are on Blue Sky. You name it, you can find the logic there. Upcoming events. I want to let you know that there is another one of these coming up on March the 6th at noon Eastern, 9 a.m. Pacific. It's going to be moderated by my colleague Murad Hamadi, and it's about the future of finance using generative AI in banking innovation. So generative AI in banking, hosted by our star AI reporter, Murad Hamadi. And coming up later in the year, but it's not too early to start planning, we have the 3rd edition of the Logic Summit that's happening on November 3rd. You can get in touch, please, with Ariel Lepper-Walker for sponsorship opportunities and everything else. That's a really big show. It is really well attended. Last year, we had Tiff Macklem, Governor of the Bank of Canada. We had Galen Weston of Loblaw. We had a bunch of other really smart people talking about their businesses and the state of the Canadian economy. And it does not look like this year is going to be any quieter. So this is all possible because of the hard work of the Logic's business team. That includes Kim Jose, who did the lion's share on this, and people too numerous to name. They're all behind the scenes. It is not possible to do this without them, and it is not possible to do this without all of you. So thank you all for taking part. Thank you for listening. Thank you for your questions. We'll see you next time.